Yeah, it was a pretty solid report. They were able to drive pretty strong same store sales, especially at Longhorn. They had a social media post go viral about the return of their Parmesan crusted lamb chops. So all in all, it was a pretty good quarter. The issue would really be, twofold. Number one is their fiscal 27 guidance came in light on the EPS line, right? This company is known to guide pretty conservatively, so that could be what's going on there. And the other thing is, sales are going to slow sequentially. So sales are going to slow sequentially for everyone because the restaurant industry had a very good summer last year. So now we have to lap those tough comps. We have tough base effects, and especially so for Darden's brands. So Darden's brands had a nice boost last year from rolling out third-party delivery with Uber Eats. And now that they're going to lap it, especially Olive Garden, sales are going to slow.
So, Michael, they also own Ruth's Chris Steakhouse. You mentioned Longhorn, but what is happening at Olive Garden? We know that they've been trying to get things back on track, and they even were doing smaller portions. I think they're still doing that. That doesn't seem to be taking. What's going on? Why can't they seem to gain traction with the consumer?
Yeah, I don't necessarily feel that that's the case. I mean, they had same store sales that were pretty strong, last year, right? Like, it's basically part of the issue is their own success. So last year, Olive Garden had a pretty good year, and now they have to lap those strong results. We still think that Darden is gonna outpace most of their casual dining peers, Olive Garden included. Um, but we see this industry as a whole slowing this summer. You know, um, Low income consumers are still strapped, right? They spent their higher tax refunds, at the pump, and we expect restaurant, sales here to start to decelerate here over the next quarter, and you know, Olive Garden and Darden is not immune.
So what do you see, Michael, just across the board? You cover all these restaurants. You see from the quick service restaurants all the way up to some of the higher end stuff. Is the K-shaped economy apparent in the restaurant business as well?
For sure. We've been writing about it for several years now. We were probably the first industry to feel it. And
Yeah.
I'd say going back 2+ years, we saw it. I think, I forgot, maybe it was Chipotle who was one of the first to admit it because they didn't have that many low income consumers. So it wasn't going to impact them as much as some of their peers. But, yes, this is inflation really impacts the restaurant industry. Number one, it impacts low income and middle income consumer spending, right? People have been spending way more at the pump over the last couple months than they had been. That takes money, out of their wallet that could be used for restaurant visits. Restaurants are very, very sensitive. It really is a canary in the coal mine for the economy in the United States. And low income consumers remain strapped. Low and middle income got a boost with these refund checks. We expect that to be short lived. And now we just have to, face some tough comps. I think it's a tough time for restaurants. Low income consumers not getting better, and it's not going to until we see inflation get back down to that 2% or below.
Yeah, the margins are just so razor thin for so many of these restaurants. But did they say on the earnings call anything about beef prices, these high beef prices, and the fact that consumers are still going to steakhouses, it seems like in droves?
Including tonight.
Steakhouses do pretty well in times of beef inflation, and part of that is, the gap between what they pay at the grocery store and at the restaurants tends to close. Restaurants can sell different cuts of meat, right? So they can be more particular, and take advantage of movements of different cuts of meat. And so the gap actually shrinks when we see beef inflation. And so people will opt to get their steaks out at a restaurant. This year, we're looking for more inflation. It's not going to be what we saw last year. So Darden was talking about some low single-digit beef inflation. It's going to be higher in the first quarter, but then it's going to start to lap some really strong inflation in the back half of last year. And so for that reason, the chain's going to see less beef inflation. The entire industry is going to see less beef inflation as the year goes on.
I'm getting my New York strip tonight at Keen's Steakhouse.
I passed Keen's the other day, and I thought of you. That's your favorite steakhouse in the city, right?
Yeah, some boys are coming in from out of town.
Nice.
That's where they want to go, so we'll do that. Hey, Mike, one of the industries singled out as potentially at risk from tighter immigration was the restaurant industry. Have you seen that? Has that come to fruition?
Yeah, we have seen it. And we were just we've been writing our mid-year outlook, and what we've been talking about is that casual dining in the first half of the year outperformed quick service restaurants in terms of their sales, in terms of valuation. They really have for the last year and a half. And so a big part of that is a better supply and demand balance. So since the pandemic, like right after the pandemic and for a while, casual dining chains, full service sit down chains have been shutting stores. In fact, they've been shutting them for 15 plus years since the Great Recession. And so, but at the same time, quick service and fast casual names, for some reason, this narrative came out that quick service was recession proof, as ridiculous as that is. And, people were building quick service and fast casual chains as fast as they could for the last 5 or 6 years. And now that part of the business is overbuilt, whereas casual dining has a better supply and demand balance. And so now that, immigration has declined, these full service chains are just in a much better spot.